Tell me something. How does someone who immersed himself in macroeconomics for 30 years, right, who pored over current account deficits, who placed bets on interest rate differentials, get comfortable conceptually, intellectually, physically even, with something as abstract as cryptocurrencies?
You know, in a lot of ways, this is a market like any other market, and you see the psychology of fear and greed and in the charts the same way you'd see them in the charts of the Indonesian rupiah or dollar yen or treasuries. They're exaggerated because of less liquidity and because you can't get short. There's not a real good way to short, and so when they fall, Jamie Dimon makes a comment. China bans the exchanges. The trend line breaks. They fall a lot farther than they would have in other markets because there's just not a short base to cover, and so you go until you reach a new level of support and kind of rebuild your base.
How do you know when to buy and sell? How do you trade this thing?
You know, there are multiple ways to trade. One is it's just macro. And so I trade the ballet of the charts, the ballet of the prices. I always tell people I need a story and a chart. And there's a lot of information. And so part of it is event driven and access to information. So one of the things I keep trying to do is put myself in the center of the ecosystem. It's when you're center of the ecosystem and it's still a relatively small world, you know what's happening. And so when the Ethereum Alliance got announced, it was well telegraphed that it was going to get announced. You talk to people, you knew it was going to get announced, and then it gets announced and the price goes way, way up. And so I would call that an event-driven trade. The broad trading of it is macro, though. You'll see mini zeniths and euphorias, and so I sold at 5,000 or 49.80. I actually sold some Bitcoin, and then, 3 weeks later, you're trying to buy it in the low 3,000s. And listen, if you're good at that and you're a trading junkie, it's a lot of fun. It does increase your tax bill. And so for some people to just sit, that's a different strategy.
You're trading what, Bitcoin?
We trade
Ether? Jesus coin?
I've not in Jesus coin. I've taken the approach to participate in all sides of the ecosystem. So I have mines, investments in mining.
To create new coins?
To create new coins. That's been an interesting business. It's been a money loser for us in local currency terms, right? I spent Bitcoins to buy a Bitcoin mine. If I had spent dollars to buy a Bitcoin mine, I would have made a lot of money. But you were better off just owning the Bitcoins. And in Ether, you were far better off just owning the Ether than building Ether mine.
Where are you trading? What platforms?
So, we're fairly large, and so we trade at lots of different exchanges. And one of the tricks, or the risks in this business right now is the riskiest money you have in the system is being left on the exchanges, because
there's no central clearing there.
And they're not that well capitalized, and so you don't leave that much money on the exchanges. And so we trade in lots of them. Gemini here in New York, the Cameron and Tyler's exchange is one of our go-to places, because that got regulated. You feel a little bit better about it. And I know those guys, so if something really bad happened, I go down and give them a shot.